Welcome to the Deep Dive, where we cut through the noise to bring you the insights that truly matter. Today, we're taking a deep dive into Bluebird Corporation, ticker symbol BLBD. We've got a fantastic stack of sources for this one, primarily a comprehensive research report from Compasscope, and we also have their recent fiscal 2025 third quarter earnings call transcript. That's from August 6th, 2025. Our mission, as always, is to give you a shortcut to being truly well-informed, highlighting the nuggets of knowledge that help you connect the dots.
That's right. And Bluebird is at a really fascinating juncture. They're navigating some significant shifts in technology, policy, market demand, all within a very specific yet, essential industry. We'll explore their business from, every angle, not just what they do, but the strategic why behind their moves.
Okay, let's unpack this then. Bluebird Corporation, it's been an iconic name for nearly a century, right? But what exactly is their core business today, and how have they evolved beyond just, the classic yellow school bus image?
Well, at its heart, Bluebird designs, manufactures, and sells school buses, also related commercial vehicles, primarily across North America. The crucial point here, I think, is their integrated offering. They build buses that run on diesel, gasoline, propane, and battery electric power. That's key. And beyond manufacturing, they also have a dedicated aftermarket parts business and, interestingly, a small bus joint venture. It shows a surprisingly broad portfolio.
That sounds like a really comprehensive approach, much more diversified than many might imagine. Can you break down their key lines of business for us, maybe into distinct segments?
Absolutely. We can basically group them into four main areas. First, there's their core school bus manufacturing. This covers both Type C and Type D buses, and importantly includes all four powertrain types, the traditional diesel and gasoline, alongside alternative fuels like propane, and the increasingly vital battery electric or EV options.
All four types, okay.
Second is their small bus manufacturing. This is handled through their joint venture, Microbird, with Girardin. They produce Type A school buses and, significantly, U.S. shuttle buses. These have a strong Buy America focus coming from their Plattsburgh, New York plant. That new plant actually just began production in their third quarter of fiscal 25. It effectively doubles their small bus capacity, a very strategic move to meet specific market demands there.
Doubling capacity, wow. And Buy America focus, that's interesting. What's the third area?
Third, and this is, I think, a really exciting new segment set to launch in 2026, they're developing Bluebird commercial strip chassis. These are essentially the foundational frames, for vocational and work truck applications. And they'll offer both propane and battery electric variants. So this marks a significant expansion beyond their traditional school bus market.
Right, moving beyond schools into work trucks. Makes sense. And the last one?
And finally, their aftermarket parts and components segment. This provides genuine replacement parts, warranty support, service, all through their extensive dealer network. This not only generates consistent revenue, but critically enhances the life cycle value for their customers, helps foster that long-term loyalty.
So it's really clear they've diversified far beyond just the yellow school bus. This shift into new vehicle types, these different propulsion systems, it's a massive evolution, shows a company looking way beyond its traditional roots. Which I guess brings us to the next big question. How do these innovations and their unique position stack up against their rivals in this specialized market?
Yeah, and what's striking is that Bluebird has carved out a very strong competitive position. They've done it through several key advantages. Their alternative fuel leadership is probably paramount. They delivered 271 electric buses just in Q3 of fiscal 25. And they have 1,200 EV units in their firm backlog right now. Cumulatively, think about this, they've deployed over 2,500 EV buses and a remarkable 22,500 propane buses across 41 states. That makes them the OEM, the original equipment manufacturer, with the broadest low and zero emission fleet in the U.S. school bus market, period.
22,000 propane buses. That's huge. I didn't realize propane was that significant for them.
Oh, absolutely. And they also boast a full propulsion portfolio. They're the only OEM offering Type A through D buses in diesel, gasoline, propane, and battery electric. This diversification is key because, look, their diesel mix is now less than 50% of sales. That's a stark contrast to most rivals who are still, 80% or more reliant on diesel.
Only 50% diesel, okay. That's a major shift.
Yeah. Huge shift. Another crucial strength is their nationwide independent dealer network. This is a significant advantage for parts and service penetration. It directly enhances that life cycle value for school districts we talked about. And, you can see it in the numbers, their profitability momentum. Their adjusted EBITDA margin, that's a key measure of operational profitability, it hit 14.7% in Q3 FY25. Their full-year target is 14.5%. This margin expansion really underscores their pricing power and, importantly, their capacity for reinvestment.
Those certainly sound like formidable strengths,
Yeah.
especially that leadership in alternative fuels and the full portfolio. But, every company faces headwinds. What challenges are tempering Bluebird's competitive position? What's stopping them from completely dominating?
Yeah, there are indeed a few significant challenges. One is definitely policy risk. Things like federal clean school bus, CSB funding freezes, or subsidy rollbacks. These are slowing near-term EV orders. Creates uncertainty for districts.
Right, the funding piece is crucial for EVs.
Absolutely. Another challenge is capital allocation tension. They just announced a new $100 million share repurchase program. Now, that's beneficial for shareholders, sure, but it trims cash available for critical things like capacity expansion and R&D, especially compared to truck-affiliated peers like, say, IC Bus or Thomas Built, who often leverage much larger balance sheets from their parent companies.
So a trade-off between shareholder returns and internal investment.
Exactly. And they also face input cost exposure. Their fiscal year 2025 filing specifically cites tariffs on imported parts, plus ongoing battery cell and semiconductor constraints. All of these things pressure their cost base. These are, universal manufacturing challenges right now, but particularly acute when you're scaling new technologies like EVs.
Okay, that gives us a clear picture of their internal and external challenges. So how does Bluebird actually measure up against some of its main competitors in this pretty dynamic market?
Let's do a quick comparison. You've got IC Bus, that's part of Navistar Trading. They're a market share leader. They leverage a 5C e-mobility ecosystem and have that captive chassis and powertrain scale from Navistar. Their vulnerability, though, is a minimal Type A, offering the smaller buses and heavier cyclicality because of their connection to the truck segment.
Okay, so strong, but maybe less focused on the whole range.
Kind of, yeah. Then there's Thomas Built, part of Daimler Truck. They benefit immensely from their parents' deep pockets, deep capital. They offer advanced tech, like a second-gen EV bus with efficient e-axles and 800-volt battery tech for faster charging. Their challenge: often a price premium and sometimes a narrower dealer footprint compared to Bluebird.
Higher tech, maybe higher price.
Yeah.
Got it. Who else?
Collins Bus. They're part of Forest River, which is under Berkshire Hathaway. Collins is a lightweight Type A specialist. They partner with Lightning Motors for their battery electric vehicle, or BEV, chassis. But they lack the larger Type CD models, and they rely on third-party powertrain suppliers, which can limit their control and scale.
More of a niche player, then.
Exactly. And finally, we should mention Lion Electric. They were an early BEV pioneer, had some real in-house battery know-how. However, they faced bankruptcy in 2024. That voided U.S. warranties. They closed their Joliet plant. It significantly eroded customer confidence, a tough situation for them.
Yeah, bankruptcy changes the game entirely.
It really does. So what emerges from this, when you look at it all together, is that Bluebird isn't just surviving, they're strategically positioned. They are arguably the most defensible player in alternative fuels right now. Their multi-layered advantage, that diversified portfolio, the strong dealer infrastructure, it's hard for rivals to match. But, as we said, this advantage is tempered by that external subsidy uncertainty and having smaller balance sheet resources compared to the big truck-backed rivals like IC Bus and Thomas Built. Despite those factors, Bluebird really does maintain the most defensible alternative fuel position in the North American school bus market. Sustaining it, though, that'll require continued margin gains and very targeted reinvestment.
Okay, that makes sense. A strong position, but they need to keep executing and investing smartly. So with that competitive landscape in mind, what's Bluebird's actual playbook for future growth? Where did it see the biggest opportunities to expand their footprint and their profitability?
Right, their growth strategy is pretty clear and multi-pronged. Firstly, capacity expansion is a huge focus. They're constructing that massive 600,000 square foot Type D EV facility down in Fort Valley, Georgia. It's slated to launch mid-calendar year 2027. This thing will boost their one-shift capacity to around 14,000 buses a year, and they're targeting 400 new jobs. The project economics look great too, an impressive internal rate of return, IRR, of 28%. And remember that $80 million Department of Energy grant? That covers half of the $160 million cost. It's a significant government-supported investment in their future.
Wow, 28% IRR and half paid for by a grant. That sounds like a smart investment. What else is in the playbook?
Secondly, they're aiming for a significant volume and mix lift. Their fiscal year 2025 guidance projects about $1.45 billion in revenue on roughly 9,300 units. But long-term, they're aiming much higher. $2 billion in revenue, over 12,000 units, driven mainly by EV bookings and those new commercial chassis sales we talked about. And their EBITDA margin goal alongside that is ambitious, 16% plus 5.
So more buses, more revenue, higher margins. Okay.
Third, they're laser focused on alternative fuel scale. We mentioned the 271 EV deliveries in Q3 FY25. They have 1,200 firm order EVs in the backlog across 41 states. This supports a sustained annual EV run rate of over 1,500 units by fiscal year 2027. This isn't just about selling a few EVs here and there. It's about building a scalable, high-volume alternative fuel business. That's the goal.
Getting that EV production really ramped up.
Exactly. And finally, don't forget the aftermarket and lean transformation initiatives in their parts platform, ongoing cost-out programs. These are all designed to underpin margin expansion and generate strong free cash flow. They're projecting $90 to $100 million in free cash flow for FY25 alone. This focus on operational efficiency and that steady parts revenue stream is crucial for long-term stability.
Those are certainly ambitious plans, covering capacity, volume, mix, and efficiency. How do these ambitions compare with what competitors are doing? Are they uniquely positioned with this plan, or are others aiming for similar growth?
Well, peers like IC Bus and Thomas Built, sure, they have larger balance sheets backing them, but their growth often seems tied more to, say, ecosystem adoption or maybe next-gen product launches. These can be more complex, maybe slower to scale across the board. Collins and Lion Electric, as we discussed, they just have more limited scalable upside right now because of their niche focus, or, in Lion's case, recent financial struggles. So Blue Bird's combination, the funded capacity build-out, especially with that DOE grant, plus the diversified propulsion lineup and that very clear margin roadmap, it really yields, I think, the highest quantified long-term profit trajectory among the dedicated school bus OEMs.
Yeah.
They've really laid out a very specific and arguably achievable path.
A clear funded path. Okay. But growth strategies always come with execution risks, right? Especially when they involve huge capital projects like that Georgia plant and launching whole new product lines like the commercial chassis. What are the potential pitfalls Blue Bird needs to navigate to actually achieve these ambitious goals?
Good. Absolutely. Execution risk is real. Blue Bird faces several, primarily stemming from external policy and economic factors. The first one is a potential DOE grant delay. Remember that $80 million for the Fort Valley expansion. While approved, the funds were noted as frozen for review as of early August 2025. That creates funding timing risk for the new facility. This kind of delay can push back critical projects.
Right. The money's approved, but maybe not flowing on schedule. That's a risk.
Exactly. Another significant risk is a federal subsidy pause. Uncertainty around the EPA's clean school bus funding for future rounds, that could definitely slow EV order momentum. It directly impacts their alternative fuel growth strategy.
The subsidy roller coaster continues.
Pretty much. Tariffs also play a big role.
Yeah.
Tariff-driven demand volatility. We saw the industry backlog contract recently. Blue Bird's own backlog fell to 3,900 units, partly because tariffs lifted procurement costs. Now, management says they're pursuing margin-neutral pricing, passing costs on. But volume risk persists if districts just decide to wait due to cost uncertainty.
So even if margins are protected, sales volume could dip.
Could. They also face ongoing supply chain pressures. The company flags exposure to commodity costs, labor constraints, component availability, especially semiconductors. These are all material execution variables. And lastly, a labor cost step up. They have a 3-year contract with United Steelworkers, the USW union, running 2024 to 2027. It lifts wages by, I think, 12% to 40% over the term. That adds fixed cost leverage, especially if volumes were to soften unexpectedly. Creates a need for consistent high-volume production.
Okay, those are certainly some serious potential headwinds. Funding delays, subsidies, tariffs, supply chain labor costs. How does Blue Bird's rich profile with all that compare to its peers? Are they in a better or worse spot given these challenges?
On balance, I'd say Blue Bird's business execution risk is moderate. It's chiefly from those policy-driven funding delays and the tariff-related demand swings. But these are partially offset by their established backlog, that funded capacity project, and having a stable labor agreement in place now. Now, compare that. IC Bus faces similar quality control and labor risks, but they do have that larger balance sheet cushion from Nevis or Triton. Thomas Built probably bears elevated recall risk and launch integration exposure with some of its newer advanced products. Adds complexity. Collins Bus is constrained by persistent chassis shortages and just a high dependency on its supply chain. And, as we discussed, Lion Electric's post-bankruptcy status, that really places it in the severe risk category.
Okay, so putting it in context.
Yeah, putting it into context, Blue Bird's execution risk seems lower than Collins Bus and Lion Electric, maybe slightly lower than Thomas Built, given their product launch risks. and broadly in line with IC Bus, just without the same deep pockets. So overall, it places them in a relatively strong position within their competitive landscape for navigating these kinds of challenges.
Relatively strong. Okay. That makes sense. Let's bring it right up to the present then. We have their fiscal 2025 third quarter earnings call transcript. What were the real key takeaways from that call, and what trends are shaping their immediate future right now?
Right, the Q3 2025 earnings call, it reported results through June 28, 2025, and it showed continued strong momentum, really. I think the key takeaway here is Blue Bird's remarkable operational resilience and their pricing power. It allowed them to not just meet, but actually beat expectations, and then reinvest strategically, even with all the market uncertainties we've talked about.
Beat expectations and raise guidance.
Exactly. They delivered record sales and adjusted EBITDA, beat their own Q3 guidance, and then subsequently increased their full-year guidance despite that tariff uncertainty. Revenue climbed a strong 20% year-over-year to a quarterly record, and their adjusted EBITDA margin hit an all-time high of 14.7%. That's a significant improvement, about $10 million stronger than the previous year. It demonstrates not just growth, but really profitable growth.
14.7% margin is impressive.
Very. Operational execution was clearly strong. The company mentioned they're actively exploring automation and manufacturing execution systems for future cost reductions. Long-term thinking. Pricing discipline was evident, too. Bus prices remained higher year over year, and they've implemented that margin-neutral tariff strategy we mentioned. They pass on the tariff costs, but they stabilize pricing through March 2026 to try and reduce customer uncertainty. A clever move, I think, to help unlock orders that might have been paused.
Giving customers some price certainty for a while, yeah.
Exactly. Their dominance in alternative-powered vehicles continues as well. 61% of their unit mix in Q3 was alternative fuel. That far exceeds most major competitors, who are often less than 10–15%. And crucially, remember, they are the exclusive supplier for propane products in the industry. Gives them a unique competitive moat there.
Propane keeps coming up. It's a bigger piece than many realize.
It is. EV sales were also a record 271 units in Q3, making up 11% of their volume. They project about 900 EV unit sales for the full fiscal year. Now, while tariff volatility did lead to an industry-wide reduction in orders, including theirs, their backlog stood at 3,900 units. Management described that as being in the sweet spot of around 4,000 units. They view the dip in orders as temporary. They cited an aging fleet out there, a heavy replacement cycle coming up, and just pent-up demand.
So the backlog dips, but they feel it's still healthy and temporary.
That's the message. Free cash flow is very strong, too. $52 million for the quarter. They project $90 to $100 million for the full fiscal year 25. And good news on the $80 million DOE grant for the Fort Valley plant. Reimbursement funds are now flowing, apparently. Although spending was delayed slightly due to a review of manufacturing strategy, maybe looking at more automation.
So the grant money is moving. That's positive.
Yes. Their Microbird Plattsburgh, New York plant also started production in Q3, specifically targeting that Buy America U.S. shuttle bus market. And the new commercial strip chassis program is nearing production, set to launch in 2026. Things are moving forward. Financially, they ended the quarter with a record $173 million in cash, robust liquidity overall. And they announced that new $100 million share repurchase program for the next 2 fiscal years, 26 and 27. This follows a previous $60 million program. It demonstrates, I think, a balance between returning value to shareholders and investing in growth.
Cash generation, share buybacks, investments. Sounds like a confident company.
Yeah. And their raised guidance for fiscal year 2025 and the preliminary guidance for 2026 really point to sustained profitable growth. Long-term targets project revenues heading towards $1.8 billion, maybe $2 billion, and those EBITDA margins hitting 15.5% to 16% plus. It's a very bullish outlook. Shows real confidence in their strategic direction.
Those results certainly paint a very strong picture. Operational execution, strategic investment. It seems like they're firing on all cylinders. But for a company with such ambitious long-term targets, is there anything in these Q3 results that gives you pause? Or suggests areas where they need to be particularly vigilant moving forward?
Pause. Maybe not pause exactly, but the primary area to keep watching is that despite the strong performance, that industry-wide backlog contraction due to tariff volatility, it's just a reminder that external factors can still create significant headwinds. While management is being proactive with their pricing strategies, they can't fully control broader market sentiment or, crucially, those federal funding decisions. So while they're strong, they absolutely need to remain agile and watchful.
Right. Strong performance, but the external environment still requires careful navigation. Okay, this raises a really important question then. For anyone looking at Bluebird, maybe tracking the stock or the industry, what are the absolute key factors to watch in the coming months and years? What should we really keep our eyes on to understand their trajectory?
Yeah, based on everything we've dug into for the report and the call, here are what I see as the critical factors, kind of ranked by importance. Number one, EPA Clean School Bus, CSB, and state funding cadence design. You have to watch the timing and structure of the next federal funding rounds 4 and 5, and also the stability and breadth of state-level programs. Think New York, California, Oregon, Illinois, Michigan. Those are key states. These subsidies are still a major driver for EV adoption.
Funding, first and foremost. Makes sense. What's next?
2. Tariff and trade policy on EV components and materials. The direction, the stability of tariffs on batteries, e-axles, other key components. This will directly impact Bluebird's cost structure and how effective their pricing pass-through is. It's a very dynamic geopolitical factor.
Trade policy, okay. Always a moving target. Number 3.
3. Order intake, pricing, and backlog quality. You need to monitor their quarterly orders versus the broader industry. What are Bluebird's win rates? What are the average selling prices doing if you exclude the tariffs? And how well are bids converting to firm orders, particularly for those alternative fuel vehicles? This tells you about their real market traction.
So the actual sales momentum. Got it.
4. EV program economics and sourcing resilience. Watch the delivered EV volumes versus what's in the backlog. Are the unit-level margins for EVs getting closer to parity with the internal combustion engine buses? That's a key goal. And what progress are they making in diversifying their suppliers, especially shifting towards domestic content to maybe mitigate some of those tariff risks?
Making sure the EV business is profitable and resilient.
Okay. 5. Manufacturing strategy execution and capital intensity. The timing and the cost of that big Fort Valley DOE-funded expansion, the rollout of automation and those manufacturing execution systems they mentioned, and crucially, the resulting throughput and yield gains from all that investment. This will be critical for their long-term efficiency and capacity goals.
Can they build the factory efficiently and get the expected benefits?
Exactly. 6. The commercial strip chassis program ramp, starting in 2026. Look for certification milestones. What's the feedback from demos, our initial orders coming in, and what's the likely margin profile of this entirely new product line as it moves into production? This represents significant diversification, so its success matters.
How well does that new venture launch?
Okay.
And lastly,
And number 7, maybe a bit more indirect, but still crucial. Customer site readiness for EV deployments. Things like how long it takes utilities to do interconnects, charger procurement, and installation timelines, getting infrastructure grants aligned. All these are crucial for actual EV adoption on the ground. The buses are only one part of the puzzle for the school districts.
right, the whole ecosystem needs to be ready, not just the bus itself. Okay, so it's a real dynamic interplay then. Government policy, global trade, their own operational execution, market acceptance, even customer infrastructure. That all defines Bluebird's path forward. There's certainly a lot to track there for anyone looking for deeper insights into the company and, frankly, the broader industry transition. We've truly taken a deep dive into Bluebird Corporation today. We've uncovered their business, the competitive landscape, their growth ambitions, and the risks they face. It's clearly a company with a very rich history, but also a clear vision for its future.
Indeed. What's really clear, I think, is that Bluebird isn't just selling school buses anymore. They're right at the forefront of a significant transition in fleet transportation. They're strategically balancing those established technologies, diesel, gasoline, propane, with cutting-edge alternative fuels and expanding into new commercial segments. Their strategic moves really reflect that broader industry shift towards decarbonization that we're seeing everywhere.
It really makes you wonder, doesn't it? With their strong foundation across traditional and alternative fuels, coupled with these strategic investments in new products and manufacturing automation, how might Bluebird's journey serve as a kind of microcosm for the broader decarbonization efforts across the entire commercial vehicle industry? Thinking about everything we've discussed, what do you think is the single most important lever they can pull to really cement their long-term leadership in this evolving market? Thank you for joining us on this deep dive. Until next time, keep learning, keep questioning, and keep exploring. This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.